Hi, my name's Emma Morgan and I'm a portfolio manager here at Morningstar. This is your first quarter 2019 update. We saw a rebound in markets from the end of 2018 as concerns around China and the US trade wars faded and central banks took a more accommodative stance following some weaker economic data. All assets held within the portfolio delivered a positive return, with even some equity markets posting double-digit returns. Within equities, the US market was the strongest, rising over 11% in sterling terms. This was closely followed by UK equities, which also produced robust returns despite the ongoing uncertainty surrounding Brexit. Japanese equities were the main laggard, most notably a number of the financials lagged, and the yen also weakened over the period. Bonds also produced positive returns as we saw bond yields fall and credit spreads also tightened in. Within currencies, the pound strengthened against most of the major currencies. Within this environment, the portfolios produced strong absolute returns over the quarter and reversed much of the negative performance from the last quarter. Absolute returns were driven by equities, although our cautious stance towards US equities held back returns. However, this was partially offset by our holdings in UK equities. Other bright spots included Russian equities, which continue to perform strongly in our more aggressive portfolios, and elsewhere holding credit and also emerging market debt hard currency further buoyed the returns. Overall, we are seeking to identify fundamentally strong, undervalued and unloved assets, and we are finding pockets of opportunity within equities. In February, we added a new targeted position to US consumer staples, which looks relatively cheap and offers diversification within the portfolios. This was funded partially from broad US equities, but also from the US healthcare position, where we looked to take some profits. A dedicated position to German equities was also introduced. This market has been held back by concerns over tariffs on auto companies and a potential slowdown in China. This is now one of the more attractive developed markets in our opinion. It looks reasonably priced and it offers a number of high quality companies. UK equities remain one of our preferred markets and we continue to add to that at the very margin. We hope this gives you a good overview of the portfolios, the positioning and the performance, and thank you very much for joining us.